Alright, hi everyone. Welcome to the Market Madness webinar. Thank you very much all for coming. Alright, the course of today is the same as yesterday. The reason why I'm doing two courses today is simply because it is a very important course, not only because I'm going to teach you exactly what you need to do in order to trade professionally, but also your first strategy, which is the most important one that you will be using in the market. Now, this course is separated in two sections. All right, this first section is talking about introduction to our trading plan, and the next section is our first strategy. This course will take about an hour, maybe a bit more. Now, after our first section, I'm going to give 5 to 10 minutes to ask questions, and after our second section, I'm going to give again 5 to 10 minutes to ask questions. Alright, and then I'm going to give a competition. Every course that I'm giving out, remember that I'm going to give a small competition to all users, to all attendees, to the webinar. Now, this is our Sunbird webinar. It's called Market Madness for those who don't know. If you also want to add me on Skype for more questions, alright, I'm just going to provide you with my Skype details. Here you go. Feel free to ask me any questions. Also, if you want to enter on my group, on my Skype group, it would be more than a pleasure. All right, I'll be giving out also Market Madness latest news, etc. All right. Now let's start our webinar. So here, welcome to our webinar. What we're going to do is, first of all, I'm just going to give you the course itinerary. All right. So our first and second course is what we're going to do today. So on our first section, I'm going to introduce you to your trading plan, how to build a trading plan. Okay, this is your first step to know exactly what you need to have in order to trade. In our second section, here you can see second course. All right, our subject is minimizing losses and maximizing profits. All right, we're going to start our new strategy using only basics, as you can see here, support and resistance only. Our third course is the same subject, minimizing losses and maximizing profits. I will be teaching you what to expect from the market, all right, and when to open a position. Our fourth course will be about pending orders. I'll teach you exactly what pending orders are, and I will tell you why do we need pending orders to use them as a strategy. Our fifth course will be our first indicator. So just to remind you, I'll be teaching you the three best indicators in the market. I'll teach you what these indicators are and how to use them as a strategy. All right, so this is our fifth, sixth, and seventh course. Our eighth course will be a review of all our technical analysis. So from our first course to our eighth course, it's all technical. Our second section of our program will be fundamental analysis. Our 9th, 10th, and 11th course, I'll be teaching you how to follow news for all the currencies. I will be teaching you how to analyze an economic calendar, what to expect from the economic calendar, etc. And our 11th course, which is our last one, it would be building our trading plan. Just give me a minute to make sure everything is okay. All right. Let's go back. All right, so let's start with our trading plan. What do we need to know about our trading plan? How to build our trading plan. Okay. So first of all, what we will need to do, sorry for that, remember to ask questions at the end of our first section. All right. So your first step to your trading plan is, first of all, you need to choose and concentrate on your major currencies. I'll give you an example. Let's say I'm a trader, I'm a new trader. What I need to do is that I need to pick about, I would say, 3 currencies, all right? I would say even major ones. Why? Because they have the most volatility, and I can expect more of these currencies. So I will be choosing 3 currencies, and each currency I will analyze everything inside. Meaning I will put all my lines, put all my indicators, give my personal expectations, look at the market, what's happening in the market, etc., analyzing completely fundamental and technical analysis. Now, by doing that, it will open you a lot of doors into knowing what to trade, when to open, when to close, when to stop. Okay, so this is very important. On each currency that you trade, you need to know exactly what's happening on that currency. If, let's say, I'm trading on the currency of the Euro US dollar, all right, I need to know exactly what happened yesterday. Okay, yesterday it went up until 1.35, let's say. All right, and today I see that it's still going up. Just giving an example. And tomorrow, possibly something could happen. Why? Because President Draghi, yada yada. All my fundamental analysis is in my trading plan on that currency. All right, so this is analyzing the currency, putting all your indicators, my first, my second, my third. All right, I see that in this indicator it shows me a few open doors on that as well, and on the third one also. And with that, like I said, you will find great opportunities on knowing when to trade and how to trade. Okay, so this was our first section. Our first step to our trading plan is choosing your currency. All right, for beginners, I would prefer choosing 2 currencies, even 1. All right, normal traders 3 minimum. All right, professional traders a bit more, because I guess they have more time to open positions. Now, also what we need to do is that we will need to know how to minimize our losses and maximize our profits, okay, which is part of our course, a subject course today and next week. Basically, we will learn exactly how to open sure positions. Sure positions are positions that will benefit you at a maximum level of profit. Sure positions are positions that most of the time, and I say most of the time, not all the time, but most of the time, will bring you only profit. All right, so this is what we're going to do. On this subject, I will teach you how to open sure positions. Not only that, but I will also teach you how to minimize your risks, all right, at the lowest level, and maximize your profits at the highest level. All right, so I'm more concentrated about minimizing our risk, because the more I minimize my risk, my higher level of profits could be. All right. Okay. So in our trading plan, again, like I said in our first section, we need to apply all technical and fundamental analysis using indicators, lines, using the news, our alerts, etc. Everything has to be in your trading plan. All right. In our next course, I'm sure you must be asking the question. On our next course, I'm going to show you a template of our of a simple trading plan. No, okay, so all technical analysis, this you will learn later on during our program, our Market Madness program, and what we're going to do, we're going to apply everything in our trading plan so that it will open us all the doors possible into professional trading, into open sure positions, into a successful investment. All right, very important that you need to know, all right, and I would personally say this is the most important thing, comment that I have here and lesson, all right. most important lesson, sorry, that I'm having. This section, writing down everything, is the most important thing that you need to know. Just by the way, just to make things clear, I am recording this session. All right, for those who can't listen very clearly or having problems or want to review the webinar, not a problem. Also, I will be giving the same webinar in a few weeks for those who want to ask more questions, etc., or for new clients as well. Now, let's go back. Very, very important, all right, is writing down everything. Okay, our trading plan is not a plan. All right, to make a plan, you need to write it. You need to write your plan. Every currency, you need to write everything down. Like I said on our sections, on our previous sections, you need to write everything. If you want to open a position, you need to write your position. Okay, I'm opening the Euro-US dollar at this rate, at a stop loss, and at a take profit. You need to write it down, whether it's on a piece of paper, on a book, or on the computer, on Microsoft Word, or whatever you're using. All right, you need to write down everything. Do not open anonymous positions. Okay, it is useless. It won't bring you any good. All right. Writing down everything, I would say personally, this is the key to the best trading possible. Okay. All right. Knowing when to trade. Okay, so this will be on our next course of next week, and I'm sure you got an email to register for our next week, and I hope to see you all there. We will learn exactly what to expect from the market. All right. Because if we expect something from the market, we have a position that we have a door open for us to open a position. All right. You need to know exactly when would be the best time for us to trade. Okay. For example, for those, let's say I'm taking London time. All right. It isn't best to trade between, I would say, 3 in the morning until 7. 3 in the morning until 7 is not the best time to trade. Why? Simply because there's a lot of volatility in the market, all right? And since the market is very volatile, you don't know what direction the market will take. So if you open a position, even though you're sure that this position will go under profit, all right? Your risks are very high because a lot of corrections are made during the morning. All right, for whether it's South Africa or anything like that, all right, in the early morning, I would not suggest to trade. Limiting our trades. All right, all you need to know is that you need to limit your positions, meaning that if, let's say, I want to open, I have an account at Sunbird FX or in any other company, I need to know exactly how many trades per day I'm going to open. All right. Why? Because opening too many trades will only put pressure in my account. Even though I'm making profit, it's still going to raise my risks of losing money, and that's not what I want. What I want is that I want to set up, let's say, for example, I have an account. What I want to do is that, all right, Adam, I want to open 10 trades today. 10 trades per day, that's it. All right, I have 3 currencies in front of me. I need to make sure where and when to open. Sorry. So let's say I'm going to take, okay, so let's say I chose 3 currencies, all right? Let's say I chose Euro-US dollar, I chose US dollar Canadian dollar, and I chose GBP USD. All right? So I'm going to tell myself, okay, on my trading plan, I need to open 3 positions on the Euro-US dollar, 3 positions on the US dollar Canadian dollar, 3 positions on the GBP USD, and I have one extra position, all right? Where will I put it? That depends with you. All right? But at least by the end of the day, you're not opening more than 10 trades. This is your limit. All right? This will help you to minimize your risks. Now, why am I telling you all of this? Because we're going to see later on that a trader, a normal trader, a normal person, all right, it is very normal, but I'm telling you in advance. Some of you might laugh. Some of you might tell yourself, wow, this is very true. But if, let's say, I have an account and I'm trading, I'm going to let most of the time my emotions play the game. All right, that's not what I want. All right, I'll give you an example. A lot of traders, what they'll do is that if, let's say, they open a position and they're starting to make profit, all right, and they set up a good stop loss, what they're going to do is that they're going to close their position as soon as possible. If, let's say, a trader opens a position and automatically he's under a certain amount of loss, all right, he's going to continue to open this position. He's not going to touch the position. Why? Because the trader thinks that this position can go back up, which is not true. All right? That's why it is very important to put stop losses. All right? Do not let your emotions get the best of you. All right? In trading forex, you need to use your head and then your heart. All right? All right, following events. In our second section of our program, we will learn exactly how to follow our event calendar. All right, I'll give you an example. Last year, 2012, we saw that some countries, for example, Spain, Italy, Germany, could not afford covering their loans. So what happened is that the President Draghi spoke about providing a bailout plan. What is a bailout plan? A bailout plan is to cover the loans that other countries need in order to have a stable economy in Europe. All right. So this is a news event. All right. But event calendar. In an event calendar, you will see, okay, President Draghi speaks. So you need to know that every time the President Draghi speaks, all right, every word that he says in the news will affect majorly the market, especially the euro. Okay? More specifically, even the euro. Now, we will be analyzing future companies, bailout plans, unemployment rates, etc. All right? Following these events will lead you to a great success. Trust me. All right. As a personal trader, every time that I see that President Draghi speaks, I take all the time that I need in order to know why does he need to speak today, what's happening right now in the economy, anything. Is there a bailout plan coming up? Is there unemployment rates? Anything. President Obama for the U.S. dollar, especially for the unemployment rates, etc. Again, this will lead you to a successful chance. Again, from what you see here, of profiting from the market. All right. Keeping track of our trades. It is very, very, very important to keep track of our trades. Why? To know exactly where did you go wrong. So if, let's say, I opened a trade and my trade went under a loss. I want to know, why did I open that trade? Was it a mistake? Sorry. Was it a mistake? All right. Or was there a correction? If there's a correction, nobody can do anything. All right. Even the best trader in the world. If there's a correction in the market, all right, it happens. But if you open a wrong position, you can learn from it. You can learn not to follow your previous steps, not to open another wrong position. Even better, if you're opening a good position, if you're profiting from your position, it is always best to know exactly what happened for you to open that position. All right? All right. Also very important. Okay, making yourself a weekly target. All right, it is very important for you to make a weekly target. Why? Again, the main idea of telling you this, that you will let a lot of your emotions get in the way. So what you need to do is you need to put yourself a daily, a weekly, a monthly, a yearly. There are different kinds of traders. A weekly target. Let's say I have an account of $1,000. I'm expecting myself to make 10% by the end of the week, using 10 trades per day and having all my trading plans sorted out for me and continuing like this. not trades. I'm giving the example of all right. Again, very important, a large deposit of patience. Okay, making money in this business is not as easy as you think. All right, you need to follow, if you have the right guidance, and I hope I'm guiding you right, all right, to a righteous path. I can assure you that with patience, you will reach a successful trade, successful business. I can even give you an example. I have a big client of mine that started off with a minimum amount of $50,000. We worked for more than 5 months, all right, on a certain currency, and on that same currency, when we had our opportunity, we took it because we had our trading plan, we had everything sorted up for us, and my client went from $50,000 to $300,000 in very, very little time. So you want to be part of these people that do make a lot of money. So what you need to do is that you need to have a lot of patience. You need to limit yourself. Limiting yourself is the key to successful trading. All right, so basically this is the first step for your trading plan. All right, I told you exactly what you need to have in your trading plan. All right, first of all, let's start by choosing our 3 currencies of your choice. Okay, get informed of the currency. If, let's say, I took the euro US dollar, I need to know exactly everything there has to be on the ECB, European Central Bank, on the US dollar, President Obama, the market, the economy, especially the economy, etc., and write it down. Okay, so this is our first section. I'm going to give 5 to 10 minutes to ask questions, and I would gladly reply to these questions. So starting now, all right, 5 to 10 minutes, feel free. Can you guys hear me? Press H if you can hear me. Press N if you cannot. All right. Sorry if you couldn't hear me before. One way or another, the webinar is recorded, and I can send to those who did not listen clearly. If you did register for the webinar for yesterday, it's the same webinar, so nothing to be worried about. So go ahead if you have questions to ask. I'll be more than happy to answer them. All right, so we have a question here. Can economic news affect the daily chart? It can affect the chart at any time. let's say we have a normal volatility in the market, starting from Monday to Friday, we have normal volatility. Sorry, and on Friday, let's say on Wednesday, President Draghi speaks on the US dollar. Just giving an example. The moment that he speaks, you're going to see a complex volatility in the market. So it's either going to go up or down. It could be booming. The market could be booming on that currency. All right. The economic calendar, I will teach you exactly what is important, what could affect the market, all right, excessively, and what could not. Okay, so this basically is on our second part of our strategy program, and I'll teach you exactly how to do that. All right, so I see that a client here tried using my strategy of yesterday. It did work, but how do I place a profit target? Okay, you'll learn. I'll teach everything right now after our questions. Teach you everything. Is $1,000 per week a good target? It depends. You need to know exactly how much money you have in your account. If you have $100, do not expect $1,000 of profit by the end of the week. If you have $1,000, all right, it's 10% by the end of the week is pretty easy. All right, so I'm just giving you the minimum amount. If you have $5,000, you can expect, again, 10% is also good. $500 every week, it's perfect. All right, so you have another 5 minutes to ask questions. 2 minutes left. Take advantage of the questions before we continue our second part of our course. All right. Let's continue. So this will be our first course. Again, before I start, press H if you can hear me very well. Press N if you cannot hear me. Okay, perfect. All right, so what we're going to do is very simple. The subject is maximizing losses, maximizing profit, and minimizing losses. Sorry for that. Okay. So the first thing that you do when you open your platform, you need to put your lines. Okay, I'm going to show you again how to put your lines, etc. The first thing that you do is that you go on the currency of your choice, like I said before, on our trading plan. All right, so let's say I chose the euro US dollar. What I need to do is that first of all, okay, I need to know exactly what is the highest rate of the day. So meaning if let's say I woke up at 10, all right, heavy sleeper, and I opened my platform at 12. So and today is, I would say, the 31st, if I'm correct. So on the 31st, okay, from today at 12 a.m. until 12 p.m., all right, I'm going to calculate the highest rate of the day. I'm going to put a line there. I'm going to put a line on the lowest rate of the day, and I'm going to take the average of my highest and lowest. Later on, I'm going to show you how to calculate the average. All right, and this is part of our strategy. Remember, I'm using basics. Okay, so taking the highest rate of the day and the lowest rate of the day is very easy. All right. Remember again that you will need to know exactly how many trades you're going to open today on that currency. So if let's say today I'm opening 10 trades on anything, all right, I need to settle how many trades I'm going to open on the euro US dollar, on the US dollar Canadian dollar, and on the British pound and US dollar. Okay. Remember that the balance that you have in your account affects a lot on the position that you're taking. If you have $100, do not open a position of one lot. You can't even open a position of one lot because one lot is too much to handle of your balance. It's too big for your balance. If you have a balance of $100, open a micro lot, which is 0.01. All all right, and open only one position, because opening more than one position on $100 account will put a lot of pressure. Okay, if you have $1,000 in your account or 2,000 and up, all right, you can open more than one trade on one currency. Remember, again, what we're going to do is that we want to limit our trading. All right, we're going to open 10 trades today. Lot size, I'm going to open, for example, 0.05 on every trade. Okay, so if we calculate 0.05 times 10, you'll get exactly how many lots per day you're trading with. Okay. Remember that you will need to know exactly what is your stop loss and what is your take profit. Now, in advance, I'm going to tell you that your stop loss is the average of your highest rate and your lowest rate. Okay. Later on, we're going to know exactly how to calculate that. All right, again, like I said before, we will use our average as a stop loss. Okay, this will help us limit our losses. I'll show you why on a simple graph. How to calculate the average? It's very simple. We take the highest rate, we add the lowest rate, and we divide it by 2. So if, let's say, my high of a certain currency is 1.5 and my low is 1, so 1.5 plus 1 divided by 2, and you'll get your average. Remember that opening anonymous trades will never ever help you minimize your losses. All right, opening anonymous trades, it means simply that you just want to waste money. You just want to waste money, and you just want to open a trade. If it goes well, it goes well. If it doesn't go well, you lose everything. Not a good idea if you're very serious in this business. Hopefully you are. Okay. For the stop loss, remember how much money you're willing to lose on your trades. So if, let's say, I'm opening a trade on a certain currency, all right, I'm willing to lose 25 pips. All right, let's say on every pip is $1. Okay, so I'm willing to lose $25 on that currency. $25 there, $25 there. This will help you knowing when to stop. It is always good when to stop, okay? Because a lot of clients, even though they're making profit, they'll never stop, all right? You need to limit your trades. Remember that. This is why we need a stop loss. Also, when you open your MetaTrader and you open a position and you want to put a stop loss, you can't put a stop loss that has a difference of 15 pips from the opening rate. All right, it's always a difference of a minimum of 20 pips. All right, 25 pips, it's your choice. Again, like I said before, you need to know exactly how many pips you're willing to lose on your trades. All right, so here's an example. All right, this is how we're going to use our strategy. Remember, I'm using basics only. You're going to see that it's a wonderful, wonderful strategy. Personally, I wouldn't even call it a strategy since I'm using basics. But again, it is the most efficient one. This is what I'm going to show you right now. I call them shirt trades. Shirt trades are trades that will benefit myself most of the time. And this is how it goes. Okay, so let's say I took the Euro US dollar. Now, remember, before we even start, okay, you need to understand something that for the moment I'm using the words highest rate and lowest rate. I do not want to use these words again. I want to use resistance and support. Resistance is the highest rate of the day, and support is the lowest rate of the day. Why? Because resistance, it simply means that it resists the rate. So the rate has to be the highest. Since it didn't break through its rate, so it's the resistance. It's a line that resists the current rate, the highest rate. And the support, it means that it supports the rate, so it doesn't go below. Now, what we're going to do here is that I took a simple date, all right, any date. Just a moment. All right, so here we have your US dollar. This is the start of the day. This is a different platform that you have. Don't worry about it. This is only for analysis only. It's not for trading. So this is my start of the day. All right. So January 7th. All right. You can also verify it by yourself. Let's say again, I woke up at 10. All right, and I open my platform. At 12. The first thing that you need to do is set up your resistance and support. So here, what I did is that I saw, oh, okay, I have my highest rate right here, which is my resistance, and I have my lowest rate, which is my support. Remember that I'm at 12 p.m. Okay? What exactly happens? I'm telling myself, okay, if it breaks through the resistance, meaning that if it goes above the resistance, which is the highest rate, all right, I want to go long. Automatically, this is the strategy. If it goes below the support, I want to go short. That's it. That's the strategy. Very simple, but most efficient one. All right. Again, I'm going to use break as passing through. I'm using the word break as passing through the resistance or the support. So again, if it breaks through the resistance, meaning that if it passes through the highest rate, I'm going to go long. And if it passes through, if it breaks through the support, if it passes through the support, I'm going to go short. Oops, sorry. Here, as you can see, it broke the resistance, so I went long. And as you can see, the moment that I went long, after it broke, all right, it broke until it started going on an upward trend. So as you can see here, all right, I made more than, let's say, 35 pips of profit. Very well, all right. After the next example, I'm gonna show you where to stop. Okay. All right. Next, as you can see here, as you can see here, we have our next day. All right. So again, it went through here, let's say, and I closed my position. I want to open again another position today, which is the 8th of January. So what I have to do, again, I'm waking up at 10, or maybe I woke up at 9 and I opened my platform at 10, or again at 12. Doesn't matter. Okay, if you wake up at 4 p.m., all right. To be honest with you, yeah, you must be partying a lot last night, but sometimes you can miss your chances. Okay. Again, so let's say I open my platform at 12. I put my highest rate, which is my resistance, again, and my lowest rate, which is the support. If it breaks the resistance, I go long, and if it breaks through support, I go short. What exactly happened? It broke through support, so I'm going short. What exactly happened? I profited from it directly. Very efficient. It works on major currencies. I would say even most currencies. All right, unless there's an accumulative upward trend, meaning that there's a trend that goes only up. As you can see, for example, you can check the CHF JPY. All right, there's no point of trading there because it's a long-term investment currency. So you need to make sure. What I'm teaching you right now is how to make short trades on normal volatility, not complex, not upward or downward trends, but on normal volatility. Okay, so this is passing through the support. Okay, breaking support. Now, right now I showed you how to use the strategy. The question is, okay, now that you showed us our strategy, where do we put our stop loss and where do we put our take profit? Very, very simple and excellent question, Adam. So again, what did we say before? we said that the average is our high and low. Okay, and we said that we're going to use our average as a stop loss. Okay, so let's go back here. So the average is this rate, the highest rate, plus the lowest rate divided by 2. You're going to find a rate in between. Okay, this will be your stop loss. Preferably, having this, your stop loss as the average rate, and I will be calling it average 1. So, and you'll understand better on next week why I'm calling average 1, but I'm just giving you a heads up. I'm calling my highest rate and lowest rate divided by 2 average, the average of my high and low, average 1. Okay? So, average 1 is my stop loss. I prefer using my average as a stop loss because if, let's say, there is a correction, and again, correction, you cannot avoid it. Alright? If there's a correction and it goes against me, I'm going to use a minimum amount of pips. Instead of opening a position at long here and I put my stop loss at the lowest rate, I don't want it to fall into 50 pips. I want it to fall to 25 pips. How much I'm willing to lose pips on the trade that I'm opening. Okay, same here. Highest plus lowest divided by 2. This is my stop loss. It broke through. I'm opening a short position, and this is my stop loss. All right. It works on any other currency, all right, that has normal volatility. Let's take, for example, GBP US dollar. Again, what did I do? All right. I took the highest rate. I took the lowest rate. Put the average. All right. Remember, I need to write down everything. All right, very, very important. I'm writing my trade before I'm opening it. I'm writing my stop loss and I'm writing my take profit. Okay. After this example, I'll show you how to take profit. Now, again, I'm taking my highest rate, I'm taking my lowest rate, and I'm putting the average, which is my stop loss. If it breaks through resistance, I go long, and if it breaks through support, I go short. What happened right now? It broke through resistance, so I went long, and exactly, I mean more than 50 pips. Okay? Again, support. Let's see support again. The day before. Remember, this is the start of the day. The day before, I'm taking my highest rate, my resistance, my support, my average, which is my stop loss. I'm writing down everything. I'm writing down my highest, I'm writing down my lowest, I'm writing down my average, I'm calculating, of course, after that. If it breaks through resistance, I go long. If it breaks through support, I go short. What happened? It broke through support, I went short, I made profit, I'm closing my trade. Alright, question. When to put, okay, now I know when to put a stop loss, but now, when can I put a take profit? Very, very interesting question. When you see, for example, that you're opening a trade here, as you can see, let's go on the Euro US dollar. On the Euro US dollar, you saw that it went on an upward trend. Personally, if you want to limit your profits, okay, I would suggest to close on resistance on this strategy. I would suggest to close to take profit after I would say a difference of 35 to 40 pips. All right, normally, because if you calculate, you need to know that the market has a volatility change of 70 pips per day. All right, so if most of the time, this is a short trade, so I would suggest to take the maximum amount of profit, which is a difference of 40 pips. Okay. Sometimes, in other cases, it is best to open. It is best to take profit lower than 30 pips. Why? Okay. As you can see here, there's a normal volatility. Okay, it's very normal volatility. You can take profit as much as possible. In cases on support, for example, you see a small volatility. It's not that big. All right, it goes by, let's say, it goes up and down by 30 pips. All right, not the best thing to do when to open to take profit after 35 to 40 pips. It is best to take profit after 25 to 30 pips. But for example here, all right, when you see that it's on an upward trend, all right, I'll show you on our next courses about upward trends, how to take profit, how to maximize these profit completely. All right, so for now, I would say close after 40 pips for now. Okay, again, here you see very small volatility, very small volatility. So if there's very small volatility, there's very small take profit and very small stop losses. All right. Okay, so let's have an overview of the course before we start asking questions and before I give out the competition of the day. Okay, an overview of the course. They decide how many trades you're going to open per day. All right, so again, let's say I'm taking 10 trades today. I'm dividing it by 3. I'm leaving 1 as an extra on my 3 currencies or on my 2 currencies. It depends with yourself how you manage your account. Remember to analyze your currency. All right, if I'm taking 2 currencies, I need to analyze completely the currency, taking my high and low, my average, writing down my stop loss and my take profit, putting my lines, all right, putting my average, calculating the average as you can see here, and call it AV1, average 1, all right? Trust me, the reason why I'm telling you this is because on our next course, I'm going to show you what is average 2 and average 3 so that it's not going to be that complicated, okay? Once you wrote down everything is good and clear, you can open your trade. So this is the end of our webinar. All right, you can follow us on Facebook, on Google, Twitter, even YouTube, etc. If you need more information, all right, I'll be sending you my emails. Now I'm up for questions. Feel free to ask questions. I'm going to get 5 to 10 minutes before I give out my competition. All right, starting now. All right, so I see that not a lot of questions. Okay, so this is the competition of today. All right, so the competition is as follows. The first person to make $100 of profit gets $100 bonus. To enter the competition, what you need to do is to send an email to info@sunbirdfx.com. All right. Having account number, name, and email, and the code to enter the competition is B102. Thank you very much for coming to the webinar. I hope you had a wonderful time. Come join us to the webinar next week on Wednesdays and Thursdays, same time, on our second course, our second section of our subject. Hope to see you there. Thank you very much. Have a pleasant day.